Hello everyone, in today's video we will discuss the good, the bad, and the choppy. This is the choppy here. On this particular time we traded a JAGX. This stock is a low float stock, high relative volume, very tight spread. And we were definitely pushing it because we entered the position with less than 20 minutes before the market closes. So we entered based on the fast moving price action as well as the bullish pattern of an ascending support. So we were looking to break above this horizontal resistance at 178. So we entered our position, 1,000 shares at a price of 177. Stop loss was placed below that previous pivot and support of 175, just 3 cents below that. Our stop loss is at 172, just in case things went south. So one thing to keep in mind right off the bat, we know anytime stocks are this cheap, we have to be not only really selective but also very precise with our entry points. And of course I did not want to be holding this stock into market closed. So at some point it kept chopping around. This is what I mean by choppy. Like after that breakout, we were expecting more of a move, but it kept chopping there, going below our entry, previous resistance, and it kept going above it, creating these long bottoming tails. If you notice, topping tails. Whenever the stock looks hairy like that with a lot of tails, definitely shows that the stock is pretty choppy. So kept chopping around. Some point went all the way up to 185 and chopped back down. Just kept going up and down. And then keep in mind the stock market is closing in about 3 minutes at this point. So we were getting pretty anxious at this point, and we're thinking, darn, we need to get the heck out of this stock before the market closes. So as soon as it broke above once again that resistance, I knew, okay, let me raise my stop loss, because this thing is not going above that 185 183 mark, and two, if it does, cool, we'll eventually take our profit, right? If it keeps following this ascending support. But if it doesn't, I mean, we'll get stopped out sooner than later and at least some profit. So I'm fooling around there and I'm like getting increasingly anxious. At this point, there's literally only 1 minute left till market close. And keeps chopping around. That's what I mean. It's very choppy. It's not even moving anywhere. Now at some point, luckily, we do get stopped out, and that happens literally 10 seconds before the market closes, which at this point I was pretty much grateful it did stop me out. Alright, and this is the bad. So this stock is the same one as the previous day, and we were trading it for a continuation move. Your mind still had a low flow and high relative volume. So, well, the price is higher today. And why didn't I just hold it from the previous day? Well, stocks like these, they're trashy stocks. We're not supposed to hold them overnight because you never know what's going to happen, right? So right here at this very moment, I realized that, okay, it broke above the the descending resistance there, as well as that previous pivots. So we waited for the breakout and then the pullback, and our plan is to add on that pullback. So we did add 500 shares at 249. Now we're in the trade. Cool, right? Everything's good. Our stop loss is at 242, and we have to keep in mind that The previous support was 245, and I literally got stopped out of the stock within maybe less than a minute of entering it. And pretty sad because basically what happened was we got shaken out by this bottoming tail there. Literally 2 cents, it stopped us out. And eventually the stock ended up doing what we initially had planned for it. And that happens a lot, right? So on this these days the market has been super choppy, and it's pretty hard to trade in choppy weather, but we're doing it anyways. And now finally for the good, it has to do with the psychological aspect of trading. You know, sometimes when you wake up in the morning and you just feel off, like you can't help it, and you try to dig yourself up from those dark depths of disparity, but you just cannot help it. Well, that's how I felt this whole week, just distracted and unable to keep myself calibrated. Well, what the heck, how is this good? It's good because acknowledgement is definitely good. You know, being able to point at the person in the mirror and not only see through the phases we go through as human beings, but also discover and develop potential ways to help oneself. And that's the difference between person A and person B. You know, where person A accepts defeat with grace and dignity by embracing and enhancing the observer within, and bringing to light the wave of emotions which are undeniably unavoidable to the new trader. And all while person B grows, you know, there's always that person that grows increasingly frustrated and further pushing the imbalance. So I figured instead of being person B and degrading myself based on those previous trades and just that overwhelming feeling of imbalance, I went ahead and took a longer than usual walk and reflected further upon this idea. Furthermore, I reviewed material related to psychology of trading, and it turns out trading goes beyond even the psychology. It goes deep down to our biological composure, our roots, our human history. And in conclusion, I realized we have to see that it is not us against the market. It is not us against the machine or the stock, the monitor in front of us. We have to become one with the market. We have to flow with the stock, like water flowing down a river. And holy smokes. Well, anyways, no mean to get too philosophical with it. I'll save some for later, and I'll be uploading a live trade video from today, so I'll go ahead and link it down in the description. Thanks y'all for watching. Be safe.